Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I'm going to be sharing with you guys a major update inside of the Bitcoin price chart that shows just how identical our current cycle is to the one that we experienced back in 2019 and 2020. While price action may differ in and of itself, the time frames are what is very important to look at, and if you were somebody that was willing to hold throughout the last bear market, our time frames are almost identical to where we're at today. The best thing to do for holders, the best risk to reward for investors, is going to be for the people that are willing to be buying rather than selling during these prices. And for today's video, I'm going to be breaking down exactly how I think you guys can do it for the most profitability possible. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server or download my free ebook. Links are going to be provided for you in the description. Go ahead and check out both. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty guys, so here we are to talk about today's video of Bitcoin. We're going to be covering some Bitcoin analysis, and we're going to dive into a couple other thoughts and perspectives. But the big thing I wanted you guys to pay attention for was really the length of consolidation, and then what that consolidation looked like most recently before we got the run to 65 and 69,000. Because I think it's important if we contrast the time frames as well as look at the similarities in what the price action was like, because that's very similar to what we're seeing today inside of our market structure. Now, first things first, guys, what we noticed here at the beginning of our bull run was we had our first major impulse. Now, this was one of the biggest moves we've ever had off of a bear market low. And that is really when we saw the market go all the way back up close to those all-time highs. In fact, we topped at about $14,000. Now, what ended up happening shortly after was we went through this lengthy period of consolidation, right? Where we pretty much were just making lower lows and lower highs, but we were bouncing back and forth within this channel. We broke out of that channel here at the very beginning of 2020, and then that was what took us for our final capitulation. And it's very similar today, what we're seeing. More similar, not so much based off of exactly how the price action looks, but how we saw a similar sort of consolidation period followed by what everybody thought was a breakout. That would have been the move to 69,000. And then we got one more final capitulation that really took us below support. But this ended up being a bull trap. This ended up being a bear trap before we ended up going much higher into that cycle. Now, I want to talk about that because we're following a very similar time frame perspective, and that's something we can draw a conclusion to with the current consolidation that we're in. Now, from the very top of our move to 14K till pretty much the point in which we bottomed and began the next move into new all-time highs, that was about 450 days worth of consolidation inside of here. So it was a pretty lengthy period of time, about a year and a half that we spent just consolidating before we ended up getting some conclusion into, ultimately a breakout into new all-time highs. Now, I want to talk to you guys a little bit about what we can draw as far as conclusions, similarities to the current price action. And basically, when we look at the same time frames and we stretch that over the chart, we can see that although the price action itself is different, which would make sense, we're at a different period in the overall market structure, we can still see that we're following a similar degree of trend as far as time frames go. We can see that within the same 458 days, we still have a ways to go until we're at that exact time frame. But we're still following roughly the same sort of a time frame with our last consolidation. And so one of the things I think we need to really pay attention for when it comes to drawing where our true bottom of our current Bitcoin cycle is going to be is I think that we need to ultimately keep the conclusion of the 4-year cycle, which is going to be over here at November. So with the 4-year cycle, if we extend our time frames based off of, when our projected bottom is supposed to be, based off of, we topped at 69,000 in November. So if we draw that all the way over here, we'd be looking at about 600 days worth of consolidation. So approximately 150 days more of a consolidation than our last one over here. But even if we draw this closer towards our peak high, we move our box over here, then we're looking at about 572, which is a little bit closer to our time frames. It's still over by 100 days or more. But either way, guys, we're still following roughly the same sort of consolidation. And so, I mean, if you were somebody that was in here for this period of time, if you got into Bitcoin in 2017, even into 2018 at some point in the bear market, or throughout any period in 2019 and 2020, then you basically already know what it was like to hold throughout that entire period. And so if you're somebody that's kind of been worried about the current price action as we're sitting back at that $30,000 level, in fact, we're just right below that level, consolidating below it, and you are somebody that, you know, was willing to hold throughout this period and didn't panic sell during COVID, I think the very best thing that you could do for yourself at this point is, once again, not going to sell at support. This has been a support level, so even if we did go lower than this level, you don't necessarily want to be selling in that period. You would rather be buying, or at the very least holding until we bounce back up to a higher price. I don't think you have any real business in selling at these lower levels. You should have sold at these much higher ones if you were so worried about taking profits. And so that's kind of what I'm looking for inside of our current consolidation. If we do extend all the way to the end of the year, I'm not expecting us to go really much lower than our low that we put in here, if any at all. This to me looks like capitulation, and we can draw a couple conclusions as to why. And one of the things I personally like to look at is the volume. Now, if we trace back some of our previous volume, some of the major spikes in volume, we can see that it pretty much analyzed a cycle top. Now, this was our cycle top over here when Bitcoin ran up to $20,000. We can see we got our the biggest volume spike happened pretty much at that top. And that was the reversal of our bull market. Now, if we come down here, we don't really see a lot more volume. I mean, we see a lot of high volume as far as, you know, mimicking what we saw at the peak volume. But it was never as big as our peak volume that we saw here at the all-time highs. Now, what we see after this point is the volume continuously just decreasing and the volatility decreasing as the price is going down. And we see another major breakout in the volume basically throughout our last period of sell-off over here. And if we look at a weekly time frame, it'll look a little bit easier to identify here because the volume will show up a little bit more accurately. But I mean, we're seeing our major volume coming in at major pivot points inside the market structure. We could see that this was a cycle top over here for Bitcoin. This was a cycle bottom. We can see that the run up here to 14K was also a major point in volume breaking. Our bottom here at the COVID capitulation was another major move in volume. That was our biggest volume based off of Coinbase we'd ever seen. And even over here, we see a lot of major weekly volume that comes in at these two major weeks, or I should say wicks at the top. We see another big volume candle coming in here at pretty much the bottom of this. I mean, we went through more retests of that same support, but the bulk of the actual sell-off was done when you see the breakout in volume. And so what we see today is pretty much the exact same thing. One of the cool things I like to point you guys out to is this big wick and this big candle that we saw with the volume. Now that is a certain thing that we're going to be looking for when it comes to determining when a true reversal, when a true capitulation and a bottom is going to take place. Now I'm still, once again, like I've stated multiple times, I'm still watching for the same 4-year cycle timeframes because I think it's an important thing to watch based off of the fact we still topped at the end of the year. And so if that's the case, even though it wasn't a major blow off top, I think that we still need to pay respects to those time frames, which means, you know, when I look at this chart, I personally see that we could go for a period of consolidation. Most likely we're going to bounce back up, you know, probably go to about 40,000 approximately. It could be a little lower, it could be a little higher than that, but I'd say somewhere in the mid-range of $40,000. Go through another correction period. You know, we could go through a lot of corrective period throughout until the projected low of our 4-year cycle, which is going to be once again in November. Really closer towards the end of the year of 2022 is when our projected bear market cycle low is supposed to be put in. And so even though this isn't really a customary bear market like we've been accustomed to throughout this cycle, and even the one in 2013, and even the one back in 2011, we still, once again, can see a lot of period of consolidation and choppy market structure without ever going lower than this low that we put in here in this summer, right? So I think that's something to consider, and that's kind of what I'm going to be doing. For the most part, I'm just going to be accumulating because it doesn't make sense to sell at these levels. When we look at prior market structure, you know, really this consolidation is on par with periods of consolidation we've seen in years past, even when we compare not to this point, because this is a bull market consolidation. I mean, if you are somebody that believes we're in a true bear market, then maybe you're not going to be looking at this comparison quite as much. Maybe you'd rather be looking at this one over here, which is our true bear market in 2018, which if we come over here and draw, you're going to see that it was almost exactly 1 year from the top to the bottom. And so where we're at today, you know, if we're measuring from, let's say, well, once again, if we're measuring from the top of 69K, because here's the interesting thing about this cycle and why it's not really a true, what I would consider a true bear market like we've been used to, is we actually got the maximum euphoria over here, right? Some altcoins, select few altcoins made new all-time highs right here, but it wasn't like the whole majority of them were taking off in that period. There was only a few of them that actually were. And a lot of altcoins never really made a new all-time high. A lot of them made a lower high in this period of time. But we saw the most degree of what we would consider true mania, true euphoria inside the market. That all occurred over here at this top. That was when Elon Musk went on SNL and shilled Dogecoin, and that was when, you know, all of that crazy stuff was going on. A lot of people were onboarding with NFTs. Beeple made the biggest NFT sell at $69 million. There was a lot of big things that we would constitute with being euphoria, right? And so what's interesting about that is we got peak what we would consider euphoria, and that occurred in March of 2021. So that really wasn't even anything on par with what we would be watching for a cycle top. And so we got the correction, but it was on par with previous points that we had seen in 2017. When we got this same sort of midsummer to even spring correction in 2017, it was very similar to the move that we saw here. And so that's why during this move, I was expecting we would have one major blow off top in the same way that we did in 2017, because we were still following the same time frames. Now, obviously, we didn't get that. We got a premature top that only peaked at about $69,000, and we've been through a period of consolidation throughout here. And so we have this really weird point where altcoins never followed the 4-year cycle. They didn't top at the 4-year cycle. Most of them topped over here at really the early point of 2021. And so it was hard for a lot of people, including me, to follow along with that degree of trend. And that's why I think that we could actually be in a hybrid cycle where, you know, when I look at this chart, this entire chart just looks like something that is never completed a 5 wave. We are just missing our wave 5 impulse. And so when I personally look at this chart and I see this, I still think that we could be inside of a lengthening cycle and a 4-year cycle combined, where this entire move will still follow a 4-year cycle. This consolidation could still follow the same time frames of the 4-year cycle, and we might not start breaking out. You know, it might bounce up and we might go through something like this, but it might not start really uptrending until our projected bottom of the 4-year cycle is supposed to be in, which is going to be the end of the year 2022, right? And so we might see something like this, but it still might not change the fact that this will still be a major wave 5 that we'll go into. It'll still go all the way up to like $250,000. It'll be a massive euphoric cycle, with also maintaining the same 4-year cycle trend, right? It'll just be a little bit different. Maybe because we didn't see the same blow off top, we're not going to see the same bear market to the downside. Because keep in mind, guys, when we're comparing prior bear markets, we saw basically mid 80% corrections every single time. This one was an 84% correction. This one, I can't show you the exact top. Well, the chart doesn't exist, but I can share with you guys where the price was. It was about $1,100. So that one was once again about 85% correction, depending on where you're drawing it from. And then our prior cycle after that was like 94%. So in prior bear markets, what we're comparing, we saw a lot deeper corrections. Now, inside of the one that we're in today, we might not see a big volatile bear market to the downside in the same way that we did over here, here, and in the last 3 bear markets, because our bull market cycle top wasn't as volatile, right? And so if that's the case, we already corrected 62%. And so if we didn't see a massive bull market cycle top, you know, we might not ever even see us break lower than the level that we already did at 25,000, right? These are things that I'm personally looking at when it comes to analyzing the markets. Once again, guys, I don't have all of the answers. I think that's very obvious. Nobody has all of the answers. But what I can say is from a perspective of risk and reward, I think the reward is much greater than the potential risk of buying at these levels. Historically, we've never seen Bitcoin retest a previous all-time high in any bear market. And I don't necessarily expect that this bear market will be the first. Now, keep in mind that this is also maybe the first cycle that we never saw a blow off top. So there's other perspectives to consider here. But I'm just saying that when we look at the volume perspective as well, this is lining up with us being at a major capitulation. Not only that, but this massive wick is an exhaustion candle, generally something that you're going to see at the end of a trend, very similar to the one that we saw here at the end of our capitulation bottom back in March of 2020. And so this is really what I'm watching for, considering on the big picture. I mean, time frames wise, we've basically, depending on where we topped at, you know, if you're considering our cycle top, which technically was for altcoins over here in, you know, March of 2021, from where that point is today, we're already past a year. So in previous bear markets, you know, that was, you know, same trajectory for Bitcoin's bear market here. Same trajectory for the bear market consolidation. I wouldn't even consider this bear market, but this bearish consolidation throughout this period of time in 2020 and 2021. And it's very similar and on par with the same time frames that we're seeing throughout this one. So that's why I think we're better off holding throughout this period. Now, once again, the final thought that we need to consider here is once again the dollar. Now, we need to see this continue to go down, but as far as what we've seen thus far, it's exactly what we wanted. We're seeing a rejection at this level. We need to continue to see this pull back. As long as this continues to pull back and we see a rejection, crypto and everything else is going to be bottoming. That's the point that I've made in every single video so far. But I mean, this is a pretty big rejection candle. We're getting a lot of selling. On the shorter time frames, what we can look at from here, we could definitely see some more upside. But when we're looking at this, technically this is a bearish retest of this high, or I should say this previous support. It's going to now act as resistance, and so we can get above it technically, but as long as we're below this, I'm going to continue to bet that we're going to go lower. But if we do reclaim this, we're still below a lot of resistance up here, and we can look through some Fibonacci real quick. And what I find interesting is our resistance up here, that's pretty much the 104 zone. It goes all the way up to about here, I would say. But this entire zone is basically the 618. And so even if we do see something more of a deeper move, a bigger correction up inside of the dollar, and we bounce all the way back up, you know, keep in mind that this is still a major level, this 104 level, because if we go to a weekly time frame, we can see that that's pretty much the high that we set in over here in 2016. And so if we do bounce up, that could just be another lower high before we ultimately come back down and make another lower low inside of this trend. This is what we need to see in the dollar for crypto, for altcoins, for the stock market, for the commodities, everything else to be bottoming. We need to see the dollar going down, which I personally think is what's going to happen. I mean, it doesn't make sense fundamentally when I look at the perspective of the dollar currently. Record inflation, it's now costing people more money to borrow dollars. Why would that be a reason for us to break out of a multi-year resistance? I mean, that's just my thoughts on the matter. So that's what I'm going to be betting on. Anyways, guys, this is the video I had for you. If you guys found value in this video, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing updates. If you guys want to join the Discord server or download my free ebook, links are going to be provided for you in the description for that. You guys can also sign up for my VIP, follow all the trades that I take, NFT picks, all of that fun stuff is going to get posted inside the Discord, so check it out. Links are in the description. Now, before we wrap up, guys, I also made a new Twitter account, so if you guys want to follow me for extra charts, NFTs, all of the other stuff that I just post for free, there's going to be another link, a new link to my new Twitter account, so you guys can actually go ahead and find that. I'm going to be posting strictly Twitter stuff. I mean, I'm going to be posting strictly crypto stuff. So if you guys want to see extra charts and analysis in that sort of way, go check it out. Links are in the description. Thank you guys so much for tuning in. And with that being said, I'll catch you in the next one. As always, peace out.